Live stream now. Okay.
大家好。
大家好。
Yama, will you?
我数一数。I had to count 1, 2, 3, 4, 8. So I think we got everyone here. Hi, 星空总。But I think 那个星空总好像是 mute. Okay. Cool. So, I think we have everyone here, right? Yeah, I think so. 11. Paddy, we can't see you, but anyway, we should start. Okay. Cool. So, a very good evening, afternoon, and morning, everyone. My name is Yama, and welcome to this special episode of Crypto Tonight in Global Mining Volume by Winkrypto. This is one evening of the year that I can use the phrase mining as much as I want without overdoing it, yes. So in China, we usually wear a red to celebrate important days, so I'm wearing red today. This evening is very much about crypto mining and finance, so please join me welcoming our 10 fantastic guests from the world's largest names in crypto mining and crypto finance and media. I have learned a lot while preparing for this episode. Every guest has got interesting story to share. So let's kick off tonight with a brief introduction. Start with Zac, the CEO of BlockFi. Always you first, Zac.
Yeah. Hi, everybody. Good morning, good evening, and thank you, Yama, for putting together this event again. I'm Zac Prince. I'm the CEO and founder of BlockFi. We're a crypto financial services company headquartered in New York. We offer 3 different products today. We have a loan product where you can borrow cash secured by crypto. We have an interest account where you can earn a yield on cryptocurrencies and stablecoins. And we have a trading product where you can trade against institutional liquidity fee-free. And we also have an institutional services team that works with market makers and miners and other cryptocurrency market participants and provides bespoke lending solutions. So happy to be here. Thanks for having me.
Thank you, Zac. Zac started BlockFi in 2017. Today has managed around 1 billion worth of the crypto assets. And it's also so amazing to see Peter Thiel's fund, Valor Venture, is backing BlockFi, as well as the Alban Venture, a Fidelity fund, and Hashkey, and so on. Congratulations again, Zac. Moving on to... Thanks.
And 3 arrows, which we announced last week. And 3
arrows. Right, Sue. Nice. Moving on to Kevin, the founder and CEO of Poolin Mining. 彪哥? Yeah.
Unmute.
Yeah.
Hi everyone, I'm Kevin Pong, and I'm the CEO and the founder of Poolin Mining Pool. I'm a technical guy. Have the background of big data when I worked in Baidu. Before that, I was a recommendation system algorithm engineer. I worked at an e-commerce company. I got involved in Bitcoin about 8 years ago, 7 years ago, 2013. After half year research, I quit my job, then all in Bitcoin. I was the only Bitcoin code contributor. Also a miner. Because I have some high concurrency system experience, I am get interested in build a mining pool. So I found Poolin about 2 years ago. It has become the top 3 mining pool. But we were number 1 for a few months last year. I noticed that over than 70% hash rate was located in one country, China, and half of China's hash rate is located in one province. In flat season, usually it's Sichuan province. In dry season, it's Xinjiang province. I started to work on decentralized mining protocol. Our mission is to serve the MySpace trustless and decentralized and avoid one potential 51 attack is always important. And mining pool has a very unique position and some sort of voting power in Bitcoin ecosystem. we have been observing the market the whole 12-19, seeing a lot of crypto financial products like crypto-backed loans and structured products being offered to the miners. This year, we will expand our business in two directions. One is mining farm, offer the maintenance service. The other is crypto finance.
Thank you, Kevin. I think I know Kevin for about 1 year, and my impression of Kevin is like Kevin's so real and reliable. All in blockchain for almost 8 years, never changed his mind after seeing so many bear markets. And I think this is called real calling. Never lose the sight of your priorities. And Poolin is very strong in tech, and now is looking to hire finance talents. It's not so easy to work in a startup, but Kevin is a nice boss that you can always rely on. Advertising time over. Moving on to Leon from Genesis Capital.
Hi there. So my name is Leon Marshall. I run the sales for Europe and Asia at Genesis Capital. First off, thank you, Yama, for organizing this. We've known each other for quite some time so far. And I really appreciate the invite today. So a little bit of background. So Genesis is a regulated broker-dealer based out of New York. We've been operating in the space for around 7 years. We also have a entity which focuses on lending, and we've been doing that for around 2 years or so. And I'd say that we are, amongst the top institutional lenders in the space currently. And we can speak more about that and more about DCG shortly. A bit of background about myself. So my background has always been financial. So prior to starting at Genesis, I've been working on the sell side at UBS in my early career, and then as a portfolio manager on the buy side thereafter. I got into the crypto space around 2 years ago. So I took up a scholarship at a couple of business schools, focused on advising some projects and some data firms. Ended up meeting Barry Silbert, who is the founder of DCG, and he introduced me to our CEO over here, Michael Morrow. So excited to be here. And excited to learn more about the mining space, in particular, as it relates to Asia.
Yeah, thank you, Leon. Thanks to you for the very first time we have the real British accent in our show. And I know, Leon, you actually also studied Chinese politics at Oxford and have been to China on holidays many times. You can also speak some Chinese, right? We're going to test you later.
Don't test me later, but 不要谢谢, as you might say.
So Leon just say no thanks. No, Leon, it's a yes, please. Thank you. Now, moving on to Chun, the co-founder of F2Pool and the CEO of Statefish.
Hello, my name is Wang Chun and co-founder of F2Pool. First, I read about Bitcoin in 2011 /dot. Was contributing such Allen projects, SETI at home, which a similar distributed computing concept, the Bitcoin mining. And the difference between like SETI at home and it was a non-profit and Bitcoin can be sold for money. So I almost started to mine Bitcoin almost immediately. And 2 years later, due to the introduction of ASIC, I had to shut down my mining farm. So created mining pool. And we launched 2013, and only 1 year after launch, our hash rate overtook ghash.io and ranked #1. Today, we are the largest operating mining pool, only second to Slush. So I was personally strong influenced by Wikipedia and its principles because I had made around 20,000 contributions there back in 2004 and 2005. It has influenced me a lot how to collaborate, and especially their MPOV, the fundamental principle. And so neutral and decentralized point of view always been how I try to see this world today.
Thank you, Chun. I remember the first time I met Chun, Chun spoke to me like half sentence. So it's really privileged tonight that we already make Chun talk like 10 sentences already. Chun's a really interesting person, have travel, is like a travel man of freedom, no house, no car, only 2 suitcases, free to go anywhere, anytime. Homeless or everywhere is home. I think Chun has traveled to 75 countries and counting. Impressive. And I'm sure like Bitcoin has been very useful during all your trips, right?
Yeah, I have been living like a digital nomad lifestyle for several years, so it's kind of real decentralized way of life.
Yes, thank you, Chun. Now moving on to Wugang Xinkong, the CEO of Bixin Wallet.
Hello, everyone. I'm glad to meet you here today. My name is Wu Gang, the CEO of Bixin. I have been mining Bitcoin since 2010 and then become a believer in Bitcoin ever since. For the past decade, I have been starting my own business in Bitcoin-related fields and established Bixin in 2014. Currently, there are two main parts in our business, mining and wallet. Bixin Wallet is one of the most widely used Bitcoin wallets in China. We put all our efforts into securing Bitcoin network, and our vision is to make Bitcoin easier and safer to use for everybody. Thank you.
Thank you, Xinkong. So for Zac and Yang, Leon is already a Chinese expert. So Xinkong actually means star sky. So like space and freedom. Beautiful, isn't it? And I know Xinkong comes from Xinkong comes from tech background, specialized in peer-to-peer network, and the concept of Bitcoin is exactly a peer-to-peer payment network. Bixin Wallet is one of the Bixin Wallet is now one of the top local Bitcoin wallets in China, and Xinkong is also Xinkong's mining farm is also one of the biggest farms here, and it's also my first time to meet Xinkong. Nice to meet you.
Nice to meet you.
Thank you. And now moving on to thanks. So now moving on to Sue, the CEO of Three Arrows Capital.
Hi. My name is Suzhu. I'm based in Singapore and co-founder of a fund here called Three Arrows Capital. My background is in proprietary trading. Previously at investment bank and at high-frequency trading firms. I started getting interested in Bitcoin in late 2012, early 13, because of the arbitrage opportunities that started to emerge in that market. And later on, I found it quite interesting how people were using it as a way to move funds around the world and as a representation of digital scarcity. I definitely believe that Bitcoin has already created a sophisticated parallel financial system and has the potential to grow much bigger in scope and significance. For us at Three Arrows, we focus on trading of crypto, mainly BTC and ETH, against fiat and USDT, as well as derivatives. Separate from that, we also take some investments in the space as well. Recently investing in Deribit, also in BlockFi, and for us, it's definitely a combination both of, we feel we're in a good position now to trade a lot more actively in this market now that it's grown to the size that it is. Back in 2013, it was harder to see how to get really involved in a very institutional, big way as traders, whereas now volumes are quite high across the board, and there's a lot more infrastructure built. So it's very exciting for us to see.
Yeah, thank you, Sue. Sue was also our guest in the first episode, so thank you for being with us again. And I was talking to Nick, the founder of One Confirmation, the other day, and at the end of our conversation, we were like talking to get connected on social media, and then he said, "Okay, Yama, I think I found you on Twitter, but wow, Sue follow you. Okay, I will follow you too." So really big thank you to you, Sue. I think my followers growing not too bad. I think I have like 70 followers now. Without you, probably I will face my followers halving. Thank you. So next,
thanks for having me.
Thank you. So next, moving on to Wang Hao, the founder and CEO of CyberX.
Hey, hello everyone. My name is Hao. I'm the CEO and founder of CyberX, headquartered in Beijing. thanks Yama for the organization. I'm happy to be here. I started my career in the traditional financial industry, where I worked for Goldman Sachs Tokyo in the trading desk. I started to learn about.
Wang Hao, you can a little bit loud.
Yes.
Okay. All right. Yeah, I started to learn about Bitcoin or blockchain technology earlier in 2013, and I was deeply attracted by the concept behind this whole system. A few years after I left GS in 2013, me and Wang Hao, who's now the founder of Cobalt Wallet, we partnered and established the very first mobile crypto wallet in China called Bixin, which is eventually acquired by OKX in 2014. And after that, I have founded CyberX, which consists of referrals from the Wall Street banks like Goldman Sachs, Merrill Lynch, UBS, and buy-side hedge funds such as Citadel, AQR, BlackRock, and GSA. We define ourselves as a prime broker in the crypto space, offering a full spectrum of prime broker services, including trading, execution, OTC, spot derivative market making, and liquidity provider. Thanks Yama again for the invitation.
Yeah, thank you. Impressive background. Wang Hao usually keeps a very low profile, and this is probably the second time you see him talking in public. But we all know Wang Hao has a very high reputation in the industry, and you often find him still working at 3 or 4 a.m. in the morning, which makes me feel like, okay, someone smarter than me actually works harder than me. How am I in any position to sleep? So thank you, Wang Hao, to show you here. Next. Yeah, moving on to Peicai, the co-founder of Wayi.
Hi everyone, my name is Peicai and I'm the co-founder of Wayi company. Wayi may be a new name to you, but we have been operating business since 2014 from Bitcoin Talk forum. Wayi provide hosting and cloud mining service to global customers. We also sell mining machine globally. Now looking to expand our business in crypto-backed lending and OTC trade to better serve our customers. So far, we have served more than 1,000 customers, and the amount of miners managed by us exceeds 250,000 units. This summer, we can provide a reliable hosted service at $0.3 US dollars per kilowatt with no any other fee charge. Unlike Kevin Chun, I don't have any technology or finance background. Instead, I studied chemistry in Fudan University. But it didn't affect me falling in love with crypto back into 2013. And I was also a miner. I strongly believe in crypto assets. Thanks for inviting. Thanks, Yama.
Thanks, Peicai. I would like to share a nice story about Peicai back in 2014. So Peicai was part-time selling the mining equipment at a local Bitcoin's website, and he sold like 3,000 units every month. And like one day, a customer from the US, just by chatting to Peicai like half an hour on the internet, he immediately sent 300 BTCs to order the equipment. And Bitcoin price was like 1,000 back then. I just want to say how amazing good reputation speaks for itself. Cross-border trust, counterparty risk is going to be one of our topics tonight. Thank you, Peicai. Next, our special guest, Yang, the co-founder and co-CEO of Slush Pool.
Hi guys, thanks for inviting me to this nice talk. So my name is Capek. I'm the co-founder of Brains and co-CEO of that company. Brains is a company that has been involved in Bitcoin since 2013 when we started operating Slush Pool. It was roughly at that time when Slush wanted to move over to developing Trezor. We currently have two products. One of them is the Slush pool itself, is the world's oldest or world's first Bitcoin mining pool. We also spent some development time on our new product called BrainsOS and BrainsOS Plus, which is an open source operating system for mining devices, currently supporting S9s. The Plus version is a commercial version that has some auto tuning features. We also care for developing the Bitcoin space, so we invested quite a bit of time into coming up with a new standard called Stratum v2, which is meant to replace the original mining protocol called Stratum, and it addresses some major flaws in the current protocol, which are mostly security, inefficiency, and decentralization. So this is roughly what we do.
Thank you, Yang. So happy to have Yang with us. Yang, I'm still waiting for a Slush Pool t-shirt from last year. And please also get one
really
for...
sorry, we're going to give you one right away.
Yes, and please also get one for Chun, because he's also an admirer of Slush Pool.
Okay, we'll do.
Thank you. Last, Paddy, our media watch guest from Coindesk. Would you like to introduce yourself a bit to us?
Sure. Yes. Hi, guys. Great to be here. Yeah, like Yama said, I'm from Coindesk, and I'll just have a couple of questions maybe at the end once you guys have sort of done your bit, done your skits.
Thank you, Paddy.
Okay, thank you.
Thanks. Thank you all. Let's move on to our special sessions of tonight. It's called You Ask Me. So to start with, so Kevin, you may ask your question.
Yeah, I'll ask Zac the security issue, trust issue, cross-border trust issue. I think I know BlockFi is one of the most high-profile crypto leaders in the West and has grown really fast, especially in last year. You recently closed the Series B by Peter Thiel, Vela Ventures. By the way, congratulations. If Poolin work with BlockFi, like be a broker, we can own the service fee or the interest gap. Also, we need to make sure our customers, collectors, must be 100% safe. So, how can we work with you, make sure our collectors will be absolutely safe in BlockFi? Can you please introduce your for our collectors so we can watch them? If some accident happened, like your coins were stolen by someone, how can you cover the customer's loss? Is there something like an insurance fund?
Yeah, thank you so much for the question, Kevin. So obviously we've thought a lot about security and trust at BlockFi, and there's a number of different things that we do in terms of our approach to create trust and also a very safe environment. So first off, we decided early on that what we were trying to build for the market was not a custody solution. So we actually partner for the safe custody of all the crypto assets that are held at BlockFi right now, primarily with Gemini. And what Gemini brings to the table for us is they have a very sophisticated cold storage setup. They have insurance. They were actually I think they were the first company in the space to get insurance on crypto custodied with them. And they've also now set up their own insurance company to provide more insurance for cyber theft or operational issues than any other custodian has. They were also the first company to go through SOC 2 level audits, which is a very heavy duty bank type audit that looks at not only cybersecurity but also other operational practices. So the collateral isn't held in segregated addresses, but we have that partnership with Gemini and very robust operational controls and security procedures internally at BlockFi as well to ensure the safety of funds. And in addition to our perfect track record of almost 3 years with no lending losses and no lost funds from security, we're domiciled and heavily regulated in the U.S. market. So we have MSB registration at the federal level. and money transmission and lending licenses at the state level that provide a great deal of oversight and ongoing checks from regulators in the U.S. into our business. Furthermore, for institutional counterparties, you touched on a really good point. One of the concerns is about the financial health of our company. We recently raised additional capital, but we also provide audited financials annually and monthly financials regularly with institutional counterparties that we're working with as another mechanism to generate trust and comfort.
Thank you, Zac. I think in order to make Kevin feel absolutely safe, I think either you should come to visit Beijing, Poolin's office, or you should invite Kevin to BlockFi office to make him feel absolutely safe. And Rome wasn't built in a...
Everybody's welcome to come to our office. And I was supposed to be in Beijing in March, but
maybe after the coronavirus. So really Rome wasn't built in a day, the same as trust. Respect all, trust few, and do wrong to none. Thank you, Zac. So now you may ask your question.
Yeah, so I have a question for Kevin.
No, Peicai.
What do you think? Oh, for Pei. Yeah, I have a question for Pei, sorry. So Pei, what do you think that lenders or financial services companies could do to better support your business?
Okay. This is for me, right? Safe is our first priority concern, just like Kevin question. We worried about the counterparty risk. We can only earn a very little rate difference in this service, so we cannot accept the collateral Bitcoin go, like especially in if the market is go up, like the price of the Bitcoin maybe go 5 times high, and the collateral and the lender vanish or get hacked, whatever, meaning we lose our collateral, we may go bankrupt. So that is we cannot accept. This is our main concern. So now we usually ask our partner to work with multi-signature solution, which means the collateral needs to be managed by 2-3 multi-signature with the lender, the borrower, and us together to make sure the collateral is safe. The second point of which concern is about the rate. You need to give us a fairly cheap rate. Currently, we can fund fund money at around 7% interest rate now. So we are definitely interested in any rate below that. Of course, we can accept a reasonable loan to value ratio. That's okay for us. So safe is our first concern, and then is the cheap rate.
So it's the same, absolutely safe. Yeah, I think I'm not sure like really multi-signature is the best solution. It's like when you want to move from A point to B point, and what you need is not really the host that runs faster, but maybe a Tesla or Toyota. So we can discuss it maybe later after the show. So next, Peicai, you may ask your question.
Okay. Here's my question. The digital currency lending is very active in comparison with other financial businesses this year. Many exchanges and wallets are actively getting involved in this lending business. What do you think are potential risks in this business? Are there any systematic risks, like what happened in the last month? When the price down very quickly, how do we develop this industry in a more steady and robust way?
I think Peicai forgot to mention the questions to. Yeah.
Okay.
Well, I think at its core, the Bitcoin lending markets have really been supported by two developments. One is that there is a lot of crypto derivatives now, Bitcoin USD swaps and futures that people are trading on various exchanges. And that generates an implied interest rate on BTC, where traders can borrow BTC against USD or vice versa, depending on the flows in the underlying markets. I think that's really what has propelled crypto borrow lending to where it is now today. Whereas, 6-7 years ago, let's say you have BTC Jam or something, it's just people borrowing money and hoping that they get paid back, right? And so, fast forward to today, where people are actually able to do these higher LTV, lower LTV trades that are doing as an arbitrage against the underlying market. So, a few months ago when the curve was very steep, there was a lot of interest in borrowed dollars against BTC. And then after the March crash, there was a lot of interest to borrow BTC against dollars from firms like ourselves, trading firms. So I think that kind of behavior is very healthy for the market because it ties together the demand in the spot market with the demand in the derivative market, the synthetic market. I do think also that there's been a big trend of miners thinking about can they borrow fiat to pay expenses without selling their coins, and also for holders to borrow instead of having to sell their coins. But back to the question of systemic risk, I do think that for firms doing the arbitrage trade and firms doing this, ultimately, I think there should be a flight to quality. I think we're seeing that now after March 12th, but I think there was sort of a concept of a false diversification where, a lender might think, if I lend to many different firms doing the same thing, that's somehow safer than lending to fewer trusted firms or higher rep firms. And I think that that's not really the case, because at the end of the day, it's about how these firms are thinking about risk, black swan risk, exchange risk, and I think that after those events, people have really kind of stepped back and then said, okay, what do we actually know about our borrowers, or what do we actually know about the firms that are conducting these activities, and how can they meet a margin call, or what funds will they use to meet a margin call? So I think that one structural thing I have noticed, which I think I wouldn't call it a systemic risk, but something that the market has to get better at, is when the market crashed a lot, you also saw, even though it was very profitable then to lend BTC into the market, you saw some players say, I don't want to lend Bitcoin into the market. I want to just take them back and be safe, right? And then now that the market's safe, they say they want to lend again, but now the rate is very low, and then soon the LTVs go more and more aggressive, and terms get more aggressive and rates go lower. So it's kind of like a reverse gamma effect that we see there, where before the crash, there was a lot of interest in lending BTC at very low rates even, and on certain terms. Whereas when it's actually profitable to do so to the market as an arbitrage, people step back a bit. So I think that ultimately, if people better understand where the yields come from, who and why the borrowing is happening, and how they can pay for it, I think that that's an important step for the whole industry to say, okay, this is a sustainable, cross-border business activity that is very scalable, and not just people borrowing from each other randomly. So.
Yeah, and I think the goal of the lending market should not be lend to many firms. It should be probably work with a few trusted, high quality, transparent borrowers, as is the case in other asset classes. Thank you, Sue. Now you may ask your question.
Sure. So, Kevin, as the one of the top 3 mining pools in the world, do you think miners should think about hedging and risk management? What do you think will happen to the markets post-halving, and will interest in hedging increase or decrease?
Most miners, they are fiat believers. They just trade mining as a normal business. But indeed, in recent years, a lot of big miners with financial background joined in the place. there's much more and more big players in the mining space. Individuals are become less and less. The guy with some financial background are using different hedging and borrowing strategies. Like they can sell their future bitcoins today, or sell their present bitcoin in the future by the time value use option. It's become more and more popular recently. Most miners in China still need lots of education in terms of financial products. I would say for miners before or after having long-term need, they seek for never liquidated loan or zero interest loan, which needs a mix of options and futures derivative strategies behind. Also, I think there is a huge potential demand for the self-earning interest structured products. They can save USDT in your wallet. Some of them they don't trust current exchanges in the market. They also we need a lot of trust in. They only trust the people they know.
Yeah. I think like the market might move from spot to derivatives very fast later this year, and miners contribution will be very significant. Thank you, Kevin. So Kevin, you may ask your question. Sorry. My mistake. Too many guests. Thank you. So next we are going to move to Wang Hao. So Wang Hao, please, you may ask your question.
Yeah, well, okay. So this is a question to Wang Chun. Yeah, I heard a lot of story from you. Hope to meet you somewhere in the planet. This is a very simple question. Like we all know Bitcoin halving process is coming very shortly. How would it affect F2 business on the mining industry overall? Yeah, this is a question.
Yeah. Thank you. You're welcome. And we are a mining program. We do not operate too much of hash rate from ourselves. So it have compared to like miners, it has a limited impact to our operation as mining pool. And after pool mined the first 12.5 BTC block in 2016, just after halving. So we're about to witness the third Bitcoin halving, and to be honest, I'm quite concerned after seeing the market for almost 10 years, and the March 12 market price hit low like $3,800 US. So if the price continue to be low like that, then a lot of miners were forced to shut down their mining equipment, and the users see as longer time to execute transactions, and the Bitcoin block could get stuck if suddenly we have block reward half, like what happened on the Bitcoin Cash and the Bitcoin SV networks. But luckily, price already bounced back to around $7,000 US. Another concern is like the security of Bitcoin is directly related to the miner reward. And long-term speaking, after probably not this time, but after many times of halving, then the Bitcoin network would become less and less secure, and this could open the possibility for potential attacks, such as before, like I remember correctly, it was 2013. There was a transaction with 200 BTC fee, and if that happened, and when the network reward only like 1 BTC, 2 BTC, then you have like as mining pool ourselves, we have to make a choice. Like, should we mine the next block on top of the latest block, where like let's say Poolin, his pool mined a block with a 200 BTC fee transaction. That block probably worth like 201, 202 BTC. But we'll have to make a choice. Should we lose this 200 BTC transaction and mine on top of like Kevin's block, or should we just ignore his block and mine on top of the second last block? That probably like so long we have only like 0.5% of network hash rate. Mining on top of the second newest block will be more profitable. So that may make the blockchain split. So that's our concern. Also, we already observed that the second altcoin only after NMC, that is IXC. Probably many people already forgot about that. When it's a reward reduced to zero, that's a lot of interesting happen. And now we already forgot about this coin after like a few years. That's our concern. Yeah.
I think mining pools plays an extremely important role in securing the blockchain and protecting the neutrality of the network. Yeah. So next, Chun, you may ask your question.
As a Leo question, so nice to meet you. I actually don't know much of your genesis. Could you please introduce your like company genesis and how were you impacted during this recent market crash?
Thank you. Sure. So I'll probably back up a second and just give an introduction more broadly about DCG. So Genesis is actually a wholly owned subsidiary of DCG, and so DCG has it has 4 wholly owned subsidiaries, but three sort of well-known ones, which is ourselves, which is the trading and lending arm. And we also have an asset manager, which is the largest asset manager in crypto, and that's Grayscale. And also, I seem to have a colleague with me, and also a Brit, Paddy. So Coindesk is also a wholly owned subsidiary of DCG. As it happens, there's also a venture portfolio of around 150 companies. So that includes, where there are small sort of seed stakes, and that's, Coinbase and sort of Bitstamp and a few others, and Kraken. And we also invest in the underlying protocol itself. That's super useful to us because some of that expertise in that network can often be levered when it comes to the broker-dealer side for us to understand, for example, is this a good custody solution or not? Well, we can actually use those same resources within the DCG network to have some expertise there. So broadly speaking, Genesis sits as a wholly owned subsidiary within DCG. There's been a lot of talk on the call today about security and regulation, and all the firms here are firms that we consider friends and highly professional. We ourselves are highly regulated, so our broker dealer is run out of New York, and we are regulated by both the SEC and FINRA, and we also have a lending arm, which is also a money service business and registered with FinCEN. And so, we take that regulatory side very seriously. Our focus is very much on sort of institutional clients, and that's really where our focus has been and will be going forward. And maybe just a bit of background as to sort of how we started the lending side. We actually began the trading side 7 years ago, so we've been doing it for some time. We had some seed capital, which after a period of time became way too much working capital for us to actually trade with. And in 2014 and 15, we were doing some friends and family lending. But then, more seriously in 2016 and 2017, the conversations were being had around how do we get stock borrowed to the traders for Genesis trading. And so hence we finally launched the desk in March of 2018. And, for the first 6 months, most of that flow was participants looking to borrow to go short. So we were lucky in that sense, but very much as Sue has described earlier today, the explosion of sort of the derivatives markets, basis trading, that's really been a key part of the growth recently. And, miners and corporates are obviously have been a big part of the sort of dollar borrow demand for Genesis. So the second part of your question, March 12th and 13th was particularly memorable, and obviously it's going to be a week that I never forget. One thing I will say is that a lot of our new interest has emerged from Asia. That's one reason why we are opening a desk in Singapore, and the idea behind that will be to sort of better serve clients in the Asia time zone. One of the things that we saw was that ourselves and our counterparts were operating with almost no sleep for that entire week. So we would issue a margin call and then maybe an hour later issue another one. Despite the fact that it was very busy, for our trading desk, it was actually the best month that we've ever had, which, we're proud to say that, partly because, obviously it's great to make money, but also to manage the risk properly. But also interesting that, March of 2020 was bigger than any month in 2017. We're very lucky, I would say, to have clients, both of traditional and crypto focused, but we're very lucky to have clients who understand the need for us to issue those margin calls and worked very hard to meet them promptly. And the one thing I will say just before finishing is that, we, when it comes to the risk management side, which we obviously take very seriously, we try to be as independent thinking as possible. We ensure that we had done scenario analysis, looked at stress testing of what would happen if crypto fell by 50%. What would we do and how would we protect ourselves? And some of the thinking around that led us to be slightly more, I guess, proactive and ensure that we had sufficient collateral on hand to ensure that at least from a liquidity perspective, we were able to meet our own margin calls and not have a clog in the system. So that's one way where we tried to be proactive when it came to that particular week. And I'm very pleased to say that we had no defaults, no capital losses for that week, and we remain very confident with those that we lent to.
So it's really good to know Genesis and BlockFi as the two biggest lenders in the space did very well during the market crash, no default and no liquidation. So thank you, Leon. So now you may ask your question to.
Yes. Okay. So first of all, great to be here with so many founders and CEOs. I feel slightly like a fraud here, but nonetheless, my question is to Shinkong. So at Genesis, we've seen a considerable demand for crypto loans and in particular stablecoin loans over the last 12 months in particular. I'd be interested to know what your thoughts are about the astonishing growth of the market cap of stablecoins, and particularly in the last few months. And how do you at Bixin think about packaging these products to your customers?
Hello. So thank you. The growth of stablecoin market cap demonstrated we all need a tool to increase the liquidity of crypto assets. What's going on?
Shinkong, I think all's good. Sorry. Please continue.
Okay.
Are you using field clothes?
Yes. Okay. Moment.
星空，可以继续。We can hear you.
The increased demand most likely come from Asia. Where people were familiar with stable coin trading, especially USDT, at this point, Tether absolutely has the dominance over the market, that USDT is capturing more than 70% of Bitcoin trade today. At this point, the collapse of Tether will totally break the entire crypto market. The collapse doesn't only refer to the operation of the company, but also regulation. This is the reason USD Bitcoin Standard Token came out to help with the Bitcoin trading and liquidity, as well as to decrease the huge risk resulted from Tether's dominance. USDS has successfully operated in Bixin wallet for a month. It is not only a exchange and accounting tools for Bitcoin, but also a better stable coin in leverage, instant exchange, and crypto lending. Since customers are already familiar with Bitcoin and stablecoin exchange and have strong demand in crypto stablecoin loans, USDS will provide them enough liquidity with a low interesting rate. Thank you.
Really, I really want to say big thank you to Xingkong. Like, I know, like, Xingkong, doesn't really, do public talking very often, and especially like now in English. So it's really, really a privilege for this show. Thank you again, Xingkong.
Thank you.
Xingkong. And really, like, I can't really, wait to start to use USDS very soon. When it's going to launch? This month? USDS.
Yes. Yes, you have USDS has successfully operated in Bixin wallet for a month.
Nice.
Wow. Yes.
Nice. So after the show, I will download the Bixin wallet very soon. And Bixin wallet is really one of the biggest Bitcoin wallets here in China. Thank you. So now, Xingkong, you may ask your question.
Okay, I have a question for Wang Hao.
Yeah.
1 month ago, the outbreak of coronavirus crashed the global financial market. The crypto mining industry has also been hit badly, and a lot of miners were forced to close down their operation due to their deteriorated financial. As a team with a strong financial market background, what do you think miners can do to protect themselves from market crash? Thank you.
Thanks. Okay. Yeah, thanks, Wu Gang, for the question.
Wang Hao.
It's not me. Yeah. So cryptocurrency market is extremely volatile in the sense of both price movement and trading volume. In fact, on average, it's 5 times higher, or even like 10 times higher for some of the token than the traditional market, like S&P 500 or commodities. So you will feel like riding a roller coaster if the business is directly linked to the token price. So bearing a significant amount of fixed costs, the miners are running at a very high degree of operating leverage. It can supercharge profit growth in good times. A crash in the profits usually when the market goes south. So therefore, like having a good financial control of cash, the smart timing decision for the investment is we believe is very crucial for the miners. In the mature commodity market, also firms will have their future cash flow hedge against the commodity price movements across different tenors.
by using variety of hedging instruments. That's a smart way or the best way to protect their ongoing operations from any unexpected like price movement. So CyberX has been dedicated to helping our partners in the mining space by offering like bespoke hedging instruments, composing using like futures, options, or swaps, and also with providing like extra liquidity flow besides the exchanges. We believe it could not only protect the miners, but hopefully can also help the industry grow in a sustainable way. In addition, like because we are generating a huge amount, or a significant amount of trading flow in the market every day, we are also able to see more market insights through our own proprietary data. We would like to share it with our clients as well. Thanks. Yeah. Thanks for the question. Yeah.
Thank you. So I think like in order to keep the miners business like financially sound in the long run, I think we need to see and hear CyberX more in public. Thank you, Wang Hao. So next, and I also think like the finance and the mining should definitely talk more to each other. So the next round will be Sue. I know you have a question regarding the hash rate derivatives. Hi, Sue. You are mute.
Yeah. Okay. It's a question for Jan. So do you think hash rate derivatives, transaction fee derivatives, will ever become actually traded liquid in any way? It's obviously something that the market loves to talk about. People love to speculate about how that would work. Just from a miner point of view.
Well, if you look at the latest trend in mining, how all the operations are scaling up and how the whole industry is kind of professionalizing, I don't see a way without having such a tool at hand for the miners so that they could hedge against the risk of the rising difficulty. However, I don't have such deep financial background to like really see who would be willing to take those risks. Some time ago, we had some talks with Jack Mallers, who was presenting this in San Francisco at the Bitcoin 2019, I think, where he was explaining that there are options to do things like this, and that they were still working on the risk part and who would take it and how they calculate the risk. So from my perspective, something like this is definitely needed. But not having enough background in the finance, I don't see a way, an easy way how people will be taking the risk. But you guys are from the financial sector, and I think Yama actually said it. It's interesting if people from the mining industry would start talking more to the finance guys to understand all these details.
Yes, thank you, Yang. I think it's like really like, okay, the miner side is the market is like obvious and who's going to be on the other side. So I think after the show, we can create a group with the financial guys and you guys, and we can have deeper and further discussions. Thank you. So now, Yang, you may ask your question.
Well, I have a question for Kevin. It's going to be a little bit more technical. We've been working on the Stratum V2 protocol, which is the replacement for the original protocol, and we heard that you guys in Poolin are also working on a similar thing. So I'm wondering, like, would you be able to compare of what you're working on if you're still working on it, or did you somehow make some shift in your perception and you would like join the global effort for Stratum V2? So I'm curious about your inputs on this.
I think Stratum V2 is great, but it's a little bit academic. It will be a massive work for current pools to adopt it. Our engineers have reviewed the whole protocol and we put it on the to-do list. The bump is a bit more realistic, especially connections stateless. We need to make sure especially we are using TCP. Almost no one uses UDP to transfer the data. So keep the connection steadiness is very, very important. We can deploy a large scale of servers, upgrade or fail over. Recently, I heard lots of polls they can't upgrade their servers. They need to handle it very carefully because they have millions of connections connected to their pool. If they upgrade or restart the server uncareful, there will be a lot. The hash rate will be a big dip. So it must be steadiness, and then need to be. We need to implement features like redirection in HTTP because we need. There are lots of manufacturers, lots of kinds of miner rigs. We need to trade them on different policy, different strategy. So it's be a bit more complicated. Yeah, we're looking forward to. We have developed the bump protocol last year for a few months. Then we stopped because it will a little bit harder for our mining pool to promote it. We need let the manufacturers, the firmware joining in. I saw your firmware; it's very good.
Yeah, I think Kevin is now waiting. Yeah, sorry, Kevin, go ahead.
I almost finished.
Sorry, my internet was not doing well. So I was saying like probably Kevin is waiting for the right timing to adopt that protocol.
Yes.
Yeah. Yes. So thank you. So I think this question is actually from Yang, probably last year when we met in Chengdu, right? So I think Kevin was almost about to fly to Chengdu to meet Yang and Pavel and discuss about it. But it's good like now today in the show we can discuss a little bit. Thank you. And next we will moving on to our discussions of tonight. So it's like East and West and like finance and mining and how can we really work together to build and boost the market to 100 trillion very soon. So I would like to ask maybe Wang Hao and Suzhu both from as the prime broker and hedge fund. So what do you think? So maybe start with Su. Su, you're mute.
To clarify your question a bit, just wasn't quite sure the exact question.
Yeah, so the question is like, how can we really work together, to, East and West, and also like finance and mining, and how can we work together to, to boost and build the market together from, for example, your hedge fund point of view?
Yes, I think it definitely makes a lot of sense, and we're already seeing some mining pools go into this where they're offering more financial services tied to their pool activities. There's like Matrix Port that are trying to do that. I think also on the, as a fund manager on the finance side, I think it's, we always try to educate miners on potential risk and also the fact that the market can produce a lot of sort of negative gamma on the downside. And so to be protected against those risks. I think that ultimately, it's quite important for the systemic health of the market if there's not too much of a leverage buildup as there was last time. So my hope is that we do have a big run up on high leverage like we did at the beginning of this year where interest rates on dollars went over 40% implied by derivatives. It's my hope that, excess dollars in the crypto system will flow in more quickly to sort of smoothen out the markets and to not allow these kind of big bounties to be built up, right? Because on the move down, I think 90% of open interest on many exchanges was liquidated. That basically created a huge bounty for people to try to hunt. So I think that, that also impacts the miners who are, they're borrowing for other reasons, right? Like in a way, if miners are borrowing fiat against coins to pay for expenses while leverage traders are also borrowing dollars, to buy more Bitcoin with their Bitcoin, that almost has like a crowding out effect. So I think just like people being aware of that and how that ecosystem plays, I think is really important.
Thank you, Sue. So, what do you think, Wang Hao? Like how we can work together, with the high quality institutions from the globe to boost the market together?
Yeah, we have been already closely working with many institutions in the market, and many of them are renowned miners, exchanges, wallets, and some of them trading firms. I think since the very beginning, our mission is always to connect global assets and liquidity via blockchain technology, and to share our expertise and technology with our partners to help them grow. And yeah, we firmly believe that that's the only way for us to achieve success in the long run. And as you might know, we were very quiet in the market before because we work very hard with our existing partners and want to make sure they are fully covered from us. I think this year, in 2020, we are planning to get more partners around the world in the industry and go with them together. Yeah.
Thank you.
Yeah.
So it's really good to know, very high quality institutions like CyberX no more being quiet, so we can see you more. Thank you. So the next, maybe from our mining pools group, Slush pool, Afterpool, and Poolin mining. So what do you think? What's your thought about how we can work together? Maybe start with Chun.
How we can work together? What's the other question, please?
So the question is as a mining, I mean, it's East and West, and also finance and mining. And so I know you have been trying to make Afterpool a global pool as well. So how do you see the the opportunities in terms of the global market, so we can work together to boost the market together?
I mean, we're doing our best to become a global company and work in decentralized environment. People at Afterpool, you can meet people from everywhere. That include we have people from Australia and Germany, Netherlands, Romania, Serbia, and Stayfish is even more diversified, and the proof stake project. And even though we only have less than 20 people at Stayfish, they come from 15 different nationalities. So Stayfish has long been the #1 validator on the Cosmos network. So we've been also localized into 13 different languages, and from Tibetan to Hebrew. And we're probably the only Tibetan language blockchain crypto websites out there. So, and all these languages was translated in-house, so by our team members. And although many Afterpool clients are based in China, and we do actually have a lot of users, and we do have infrastructures and servers internationally. And more importantly, blockchain itself that does not have a border. I tweeted yesterday that Bitcoin doesn't have nationality, and Satoshi's nationality are unclear. So since one miner mining pool must have a nationality, that's from yesterday, and that's my point actually. Back to Yama.
Yes, so I think Chun has been thinking of building a completely decentralized mining farm in the Antarctic. So, and you're hoping to talk with people, smart people around the world about building it. So thank you, Chun. Next, maybe Kevin.
How do we start? Mining pool is a technical company. We make sure miners work with us 7 by 24 hours without any problem. Or so far we have 0 issues. Our service is never crashed down. We have servers in the US, UAE, Europe, Middle Asia, almost we can cover all of the world's users. Since we will start to off loans to miners, we always look to work with BlockFi or Genesis Capital. We can get cheaper and safe source of capital trust, high quality counterparty. For any institutions in the West, who want to enter mining space in China, like investing in mining or finding your product adoption, I think we are your best window, maybe one of your best window. We are careful. We watch the market for many months. We know almost everything that is going on in China. Mining. There's a lot of non-public information. We know who is reliable, who is not. We need to spend many years that we can know that. Last year, there was a big Western mining player who got hijacked around 300 million was rigs by them in somewhere in China. They mistrusted the counterparty from China. We are surprised that such a big deal, they never came to consult us before investing such big money. But after what happened, they came to us. We can't help them anymore. So it's still two things. One is a cross-border trust issue. Another is risk control. Yeah. We need to know more each other and find who is reliable. We can bring your capital into China.
Definitely. I think also, like Sue also mentioned earlier, like in this space, we probably just need a few trustworthy and transparent partners. We don't need 200 on our list. So thank you, Kevin. Next, Yang.
Well, I believe we as pool operators should do really our best to strengthen Bitcoin. And I will try to refresh my agenda with the mining protocol, regardless what it is. I don't think there are too many initiatives out there that try to secure the mining protocol. And this is something that nobody really cares about too much. But it's maybe because we didn't have any major incidents of the hash rate being hijacked. I mean, there were some minor things. But if this becomes sort of like industry standard or the black industry standard, then it could be a little bit late to start doing something about it. So I think now, considering the size of the industry and the maturity and the amount of money that's flowing into securing the blockchain, by building bigger farms, we should focus on addressing these issues. And we're open to collaboration with even with our competitors, because this is for the benefit of the whole ecosystem. Because if we make this, if there is an incident like this, it could have an impact on the price and everything. So let's just do our best.
So Yang, the other day I was asking Chun, which company he admires nowadays in the space. Chun actually mentioned Slush Pool. So he's really an admirer of Slush Pool, and I think
because I really appreciate the innovation, and the Slush Pool actually did invent a mining pool. So that was in the year 2010.
Yeah. So it's nice to hear it from you. Thank you. So I hope we're going to join in some cooperation efforts on the protocol part as well.
Yeah. So I think the mining pools, probably you should meet in person one day. I mean, after the coronavirus, also before Chun moves to the Antarctic. Okay. Next, moving on. So we will have our the mining farms pioneers, Xinkong and Peicai. Tell us a little bit more. What's your thought? So maybe start with Xinkong.
Okay. A moment.
Changing the background.
Thank you. Okay. Our main focus the next stage will be the adoption of our brand in the global market, especially promoting USDS. USDS is a Bitcoin-backed stablecoin, so it has no risk related to fiat currencies, which means it will be global used stablecoin. We are confident that USDS's idea and model is the true demand for global cryptocurrency community. For customers who have demand in crypto loans, USDS can provide them a low interest rate with a better depth. We are also interested in building our own community overseas to understand the real demand in the worldwide to foresee the bigger picture of crypto industry. On the other hand, Bixin wants to implement crypto payment. Crypto payment is Bitcoin's goal, and it is definitely the future of the industry. The application of USDS is the first step to build the payment system. So we are looking forward to working together with global institutions to complete and improve crypto payment.
So I think, thank you, Xingkong. I think maybe Genesis and BlockFi can help with the stablecoin adoption in this case.
Yes.
So next, Peicai.
Okay. In our vision, we believe cryptocurrency will become as important as water and air in future. People will need it like we need internet. However, this vision cannot be realized automatically. It will need cryptocurrency community create many valuable assets and services to fulfill people's need in different environments. Besides this, we also need to introduce them to people outside the community. Wayi want to play role in this progress by educating people how to use those services and how to gain those assets. For example, we think Bitcoin and Ethereum are such valuable crypto assets now, so we provide miner hosting service and OTC trade to allow people gain them. So I think if any institution can create such assets or service and want people, especially people in China, in Chinese market, can find us to cooperate. We will be happy to help them to do so. And this is the way we think we can contribute to boost the market. That's all.
Thank you, Peicai. So I think next, finally, as the two biggest lenders in the space, so I'm sure like BlockFi and Genesis can do and help a lot. So what are your thoughts? So first with Leon.
Sure. So, from my perspective, I think, I like to think about what miners and mining pools care about most. And, clearly rate, collateral, these are all sort of key items for their financing products. I think one area where we try to distinguish ourselves is to be a trusted, reliable counterparty. One reason why we have the regulation that we do, and one reason why we have the relatively stringent collateral requirements that we do, is that quite frankly we are taking other people's collateral. When we send those loans to miners and mining pools, we look after their collateral, and that is something that we are very cognizant that that's risk that we carry for them. The counter side of that is that, in the recent move lower, it was clear that a number of counterparts in China got wiped out through liquidations. One thing that we do try to do at Genesis is to build a longer term partnership with the miners and the mining pools, so that they're not being liquidated at the drop of a dime, but rather the approach is slightly more long term. Now, of course, we have to protect ourselves in that process, but our focus is to ensure that the client still exists, after sharp moves lower. So I think the first thing that we really focus on is ensuring that we're a counterparty where they can trust our credit risk. The second side comes down to sort of client service. My background is finance, and so is our CEO and most of the folks who work at Genesis. So we get it. When clients say, look, we want the best rate, we want the lowest collateral possible, to the extent to which we can offer that and still maintain sensible risk management, that's what we focus on all day long. The flip side of that is that, we look to focus and face the best clients possible. And that's really the sort of, where we look to distinguish ourselves. We look to face high credit rating counterparts. And maybe the final piece I just want to say before closing, and I've sort of touched on this before, but we do have, at Genesis, we're very lucky to be a part of the DCG network. And what that means is that we have access to a number of different types of companies, whether it be custodians or exchanges, security firms, retail firms. We have a network through DCG where we can connect players to many parts of the Western ecosystem as it relates to crypto, and quite frankly, global ecosystem as it relates to crypto. So half the time I'm making introductions to parts of the DCG network, and that's not something that's tangible to do with a particular loan, but rather I think counterparts find it helpful for whether they're raising money or seeking financing. That's something that we can often try and help with. So to summarize, I'd say that we focus on the credit risk side, and we focus on client service, and we try our best to help leverage our network to help our clients.
Thank you, Leon. So last, Zac.
So there's two themes that I want to touch on. So I think we have a great group of people here, and I think it's a baseline that everybody is going to continue building their business very thoughtfully, and being smart about risk management, being smart about always making their products better for their clients. But the two things I think are really important are communication and education. So on the communication side, events like this, where we can get leaders together and talk to each other even while we're in quarantine, and share it publicly, I think are very helpful. At BlockFi, we currently have one person on our team who speaks Mandarin, but we're looking to add quite a few more soon. We all need to talk with each other. There's probably things that everyone here can learn about other people's businesses that will help them improve their business and potentially transact with each other. And then on the education side of it, if we're going to raise the price of Bitcoin, it's going to require more adoption. So I think it helps to mitigate some of the risks that Chun was talking about earlier, and anything that all of our companies can do together to help make crypto assets easier to use, to educate people on why they should be buying them, and to continue as companies to be just really great actors, the better. So communication and education, I think, is what we can all focus on.
Thank you, Zac. So last, Paddy, I want to say really sorry for you to keep you being quiet for almost 1.5 hours. But now it's finally your time to speak. Please, Paddy.
Not a problem, Yama. Thank you, everybody. It's been fascinating listening to you all. Quite neatly, actually, one of my first question sort of comes off the back of what Zac and Leon were talking about. Earlier in the show, you could say, I noticed Sue mentioned that cryptocurrency lending is somewhat reliant on risk appetite at any given time. You basically the holders and how willing they are to sort of give assets as collateral or willing to loan out their assets. So do you think that further down the line, as the cryptocurrency mining industry develops and becomes more established, lending to miners won't have to rely as much as they do now on sort of fluctuating risk, or do you think that will have to change, or is there any possible way in which other sort of alternative mechanisms could be brought in?
Yeah, I'm happy to go first. So I think Sue touched on something that is very true, which is that there's this kind of fundamental shortage of dollars available to this space relative to the overall demand, probably at a steady state, but certainly relative to the overall demand in certain market conditions. And that is one of the contributing factors to volatility in the markets, which can be a big driver of price action and swing it around heavily. So, Genesis, I know, does a ton of work in this department. BlockFi does as well, raising more institutional capital and educating traditional, large, scalable sources of low-cost capital about this industry so that they can start funding it and we can expand our access to capital is going to be tremendously important. And everything's going to get more sophisticated, and our view is that you don't have to look very far to find good analogies for what we will expect to happen to this space over time. Miners, just like traditional commodity miners, will likely be large users of derivatives, whether it's futures to lock in prices or options to hedge. Everybody with a business that has somewhat repeatable and projectable cash flow is going to have an appetite for access to debt capital to not have as high of an equity capital requirement to fund their growth. And it's all about just facilitating those trends to emerge.
I guess I think it's a great question, and I would agree with everything that Zac mentioned just now. Maybe one other factor I would add is if you look at the macro backdrop with yields in the US going negative for the first time in many of the tenors, I think there will be an increasing focus or willingness to look at other asset classes in order to achieve that yield. And as Sue mentioned, when arbitrage rates are implying 40% annualized returns on dollars, regardless of one's perspective on the asset class, I think people do pay attention. I think the other factor which will affect that is banks around the world, and we're beginning to see this in Europe to some extent, beginning to get comfort around using Bitcoin as collateral. And I think as and when that trend continues and we see more of that happening, I think we'll begin to see new sources of capital which are not in the space come into the space. And I think that will have quite a profound effect on lending rates.
Okay, thanks ever so much, guys. And my other question, Xingong earlier in the show sort of indicated that there was a sort of maybe a vulnerability in cryptocurrencies with an over-reliance on Tether. And this is sort of open to anybody who has an opinion on this. Do you think that that first of all there is an over-reliance in Tether in the space, and will that over-reliance in any way impact the cryptocurrency mining space?
I think the Tether issue definitely is there's a very big community here, like in terms of the adoption of USDT. But for example, I talked to also Kevin and the other day also Chun. So I think like the people who already got in the space for like longer time, everyone is actually quite worried about it. So just to mention, we were actually planning to have Tether on our panel. when we planned the show, but so anyway, eventually they didn't attend. But I think this is really how to say. It's definitely very worrying and concerning, and I think in the community here, at least from the people I talk to, I think that's a real threat. You know, I mean, that's why Shinkong issued the Bixin, stablecoin USDS.
Okay, brilliant. Yeah, and one more final question. Obviously, there are other sort of consensus mechanisms out there. But what is the long term? Is there a long term viability for the mining industry? And again, this is open to anybody.
So
I believe it is. If you can just twist the question a little bit, that means if there is no viability long term for the mining industry, we won't have Bitcoin and anything else. So that would prove that the concept is faulty and is meant to die. And we all kind of sit around and believe that this is the right concept. So you have to have mining around. Unless we get into the discussions about staking, which I don't think belong to the mining discussion at all.
Okay, brilliant. Thank you very much. That's all my questions.
So really thank you. So I really want to say very big thank you to really our 10 fantastic crypto leaders and guests. And it's not very easy. I mean, I know your time is precious, so really appreciate you spend 1.5 hours with us, and really thank you. So we might really just end the show now.
Thanks, Yama.
Thank you, guys.
Thanks, Yama.
Thanks.
Appreciate it.
Thank you. Good night from Beijing. Bye.
Thanks.
Bye.
Bye.
Bye.